Welcome everyone to HueFin Trade Different, the only location to where we're going to give you all a heads up as to where the market is going to go. And it's been a while since we did a video for the NASDAQ, the S&P 500, as well as the Dow. So we felt it was conditioned for us to come in today and position ourselves right before the trap, take the value of these three indexes to where we expect it to go. This is how you trade different. So now, if this is the first time of you watching our video, make sure before you go, hit the like button, subscribe to the channel, as well as hit that bell notification. You definitely want to make sure you stay updated and notified of whenever we update you all on where the market is headed. So now, like I told you, the last time we did our video for these three indexes, the NASDAQ, the S&P 500, as well as the Dow, was on September the 8th, 2020. And as always, before we get started, we always show you what the trap has done in relation to what we expected it to do. So let me zoom in on this price chart for the NASDAQ real quick. And here it is. So this is the performance of what the trap has done since our last video. What has occurred? Answer that question. Tell me what has occurred in the market for the NASDAQ. Did we even come back above this ascending line during this whole time frame of us creating our forecast, as well as to where we are at right now? Did the market trap even break up above our ascending line? No, it did not happen. And it tried right here though. It tried on this particular week to break back up above that ascending line, and it fell. And not only that, the trap wasn't able to break up above 12,300 points. It couldn't do it. So those two things alone lets you know that lets us know how the trap is feeling. Weakness, period. This is why a stock market crash could be forthcoming. We're just here to show you why. First, in the NASDAQ, 12,300 points cannot be broken to the upside. The trap couldn't do it. The second thing that the trap tried to do but failed was try to break up above this ascending line. Two strikes already for those who are looking for the market to go higher in the NASDAQ. Okay, so let's go ahead and get rid of this first. Generally, you guys can see since we did our video on September the 8th, the market came and held our TP area around 10,750 points. Ultimate TP was at 10,500, but hopefully you all were able to grab 5.25% out of the market during that particular time period, because now it's over. So now we got to get in position for the next move. All right, so let's go ahead and do this real quick. All right, so now, like I told you, we couldn't make all-time highs in the NASDAQ. We couldn't break up above this ascending line. So already we understand how the trap is feeling. Okay, this is the last day of the month. So let's look at the market in the NASDAQ on the monthly time frame. Weakness is here too. So we're definitely playing weakness into the market on this forecast in the NASDAQ, no doubt. Okay, the only thing is determining where support can be. And looking at this monthly price bar for the NASDAQ, 10,800 is the first area of support. Next area, take a look at the market on the 3-week chart. 10,800. Next area is going to be back down to 10,400. So those are the two areas that we're looking for the trap to try to come in and grab some support. Okay, this ascending line is no longer in play. If anything, the market trap is consolidating this market. Okay, and you can see it right here. Market is trying to hold this support area 11,000 points. Like I told you, 10,800, 10,750 is the area that the market is expected to go. Okay, so let's do this real quick. We're going to go ahead and play a forecast on the NASDAQ on a 3-day chart. Okay, so we're expecting the market to give us some weakness in the NASDAQ. Restriction currently is at 11,500. Like I told you, 10,008. Well, we'll make it 10,750. which is about 3% market movement to the downside, which is easy to do given the massive amount of volatility that is in the space in the NASDAQ. But I'm gonna extend it all the way back down to 10,500 points. Okay, playing this on the 3-day chart. So this is our expectations for the NASDAQ right there. Okay, now we're going to move on and take a look at the S&P 500 real quick. You guys can see right here pretty much the same thing. You know, it played according as what we expected to do back in September. Market came barely ultimately to our TP area, so at least about, you know, 5.25% profitability. And that market move for the S&P 500 that is done, is over. And again, like I told you with the NASDAQ, the S&P 500 pretty much did the same thing. It couldn't make all-time highs. It couldn't break back up above our ascending line. So we already know the conditions of the S&P 500. Okay. Now, the only thing that we need to make a determination on is where support is going to be. All right. So weekly time frame, a lot of weakness is coming to the market in the S&P 500. Pretty visual area, a pretty good area, excuse me, of some support is coming in around 3,200 points. Okay, we can see that. Next area, if not 3,200, it's going to be around 3,100. Okay, so let's go ahead and do this forecast into the market real quick in the S&P 500. The restriction area now is around 3,400 points, and we're going to TP the market at 32, like I told you already, which is about another 2.5% market movement from where we are currently located. And this is our expectations of what we want the trap to move the market. This is what we're seeing. Okay, now the market in the S&P 500 doesn't look as weak as the NASDAQ. Okay, this particular index looks a little bit stronger than the NASDAQ. So if you're leaning more towards the bullish side, the S&P 500 is trending stronger than the NASDAQ. Just here to tell you all that. But again, we're still going to play a little bit of weakness into the market in S&P 500. 3,200 points is our TP area. That's where we're predicting the market to go. And then I'm just going to extend it down just a little bit further, you know, just to compensate from an increased amount of volatility due to the presidential election upcoming this week. Okay, so that is the S&P 500, and I think you already know if those two indexes are weak. I think you know what the Dow is. Okay, so here we are in the Dow. Back in September, we played some weakness, got that out. As a matter of fact, if we were to get out right now, you at least could have had 3.92% or 5.18 if we were to get out today. But either way I go, we got that profit. We got that bag out the market from the trap. So again, couldn't make all-time highs. The trap couldn't break price back up above our ascending line. So if anything, the Dow is going to hold some consolidational trading. One of the negative things though that you can already tell real quick is that this area here is restriction. 27,000 points in the Dow is now restriction into the market. Don't let no one else tell you otherwise. Okay, support is at 26,000, which is also good. So even in this particular situation, the market in the Dow does not look to make a dramatic movement like what we incurred back in February and March. Okay, we're not seeing that, but we do got some movement to the downside to go. 26,000 points all the way back down to 25,000. That's it. Okay, so even in the Dow, we don't see any indications of market strength here. This is the monthly time frame, and even here I'm still seeing instances to where the market is weak. Our two areas of contention that we're going to focus in on is 26,000 points back down to 25,000. That's it. We're not going to make this complicated nor difficult. Those days are now gone. We trade different. So what we're going to do on this forecast for the Dow is we're going to play the weakness too. Since we played a 3-day time frame for the S&P 500 and the NASDAQ, we're going to do a 3-day time frame in the Dow as well. Okay. So we told you already That restriction is around 27,000 points. I'm going to increase it just a tad to around like 27,400, and I'm going to lower the value ultimately around 25,000 points. It's not going to be exact, okay? I'm just giving us a vicinity as to where I'm looking for the trap to grab support. First area of TP though is at 26,000. All right, so that's about 2.25% profit movement to the downside of us grabbing the bag from the trap. That's it. But 25,000 is definitely a play too. So we're not here to make it complicated. We're here to give you all a heads up as to how the trap is going to move the market, just to get in position. So now, this is our trade different. What is yours? Give us your prediction, your forecast for these three indexes: the Dow, the NASDAQ, and the S&P 500. Give us your movement. Where do you think the market is headed over the next month? What would price be? And then tell us what would you TP out in the market. And just make it easy. Make sure you maintain a profitability and trade different.